Hello, this is Stephen Young with the Savvy or Surrender podcast. Welcome back to episode number 9. Today we're going to talk about when it makes sense to DIY versus when to hire somebody. And some of this might sound a little self-serving because, of course, I own Savvy Tax Strategies and Bookkeeping, where we help you with your bookkeeping, profit first, taxes. But there really is a good time when to hire. And we'll talk about that not just simply for tax purposes and bookkeeping, but other reasons as well. So there's really this trap that many business owners fall into. I know I certainly did as well, where you're thinking, you're the CEO, the chief everything officer, right? And so you just have all of these hats and you feel like you have to do it all yourself. And so sometimes you do. When you're first getting started, you don't have a lot of money. You do have to get started yourself and do it yourself. But at some point, you're no longer saving money, but you're actually costing yourself. And that's the trap that we fall into and that we need to avoid. So this episode is called When to DIY and When to Hire. There's a time to that you have to trust yourself, right, to do both. There's a time to DIY. There's a time to go ahead and start hiring. And where is that point? And so we are going to talk about a couple of methods that you can use to figure out when it's time to make that leap and when it's time to hire. So let me give you a quick example here. I like to be a DIYer on home stuff. And so I thought, I can... I'm an amateur woodworker. I've done some of the woodworking stuff in my house. And I thought, my dad was a landscaper. I went and worked with him for years. I can do this, right? No problem. And so I started working on my backyard. Well, here's the problem. One, I work like 60 plus hours a week and have kids and family and all that kind of stuff. So my time is limited really to just the weekends. And on the weekends, I have an overlanding truck. I like to go camping. My 8-year-old and I, we go camping, we hang out, we've got Taekwondo lessons, we've got family things that we do. So there's not a lot of time even on the weekends, which is my only time. So the landscaping projects in the backyard, building the pergola, all that stuff wasn't getting done. And my wife was getting kind of frustrated because she was like, when is, you're going camping every other weekend right now. Like, when is this going to happen? And I was on my knees putting pavers in and trying to figure out what parts to concrete, what parts to do paver. Am I saving any money here by doing all of this? I just bought like $500 worth of concrete that I had delivered from Home Depot from this machine that I bought for like $3,000 that had sat there for a year and had never been used. And I just thought, okay, when should I be turning this machine off? When should I be when should I stop DIYing this and actually hire an expert? And the moment of truth came when I was using my level and I was getting everything level and everything was great. And then I had one set of pavers kind of come up and meet the other set of pavers. And I was off by probably 3/4 of an inch. And I was looking at it and I had been concreting these parts into place because this was going to be like the foundation of it, right? And so I know normally you don't concrete pavers, but I was doing it here for this part. And I was so frustrated because here I had been doing everything I thought was correct to have this be done the right way. And I'm off by 3/4 of an inch. And so I know that sometimes hiring your cousin or someone off of Fiverr to, do your bookkeeping may seem like you're saving money. It may feel like it's cost effective until they vanish. They miscode your entire chart of accounts. You pay for cleanup and then pay again to get it done the right way. So cheap help or, yourself equals expensive mistakes. So to finish that story, I ended up realizing this wasn't going to work. And so I reached out to somebody that I had seen on Facebook and had them come in, give me a quote. And of course, it was a little bit more because now not only did I already pay for like $500 worth of concrete, and I had the pavers already. So that part wasn't an issue. I'd had the pavers sitting there on the side yard for, probably, I think this was my third summer that they had been sitting there, if I remember right. So they'd been sitting there for a minute. And so, we had the materials. I just needed the labor. I needed the know-how. And so a guy came in, and of course he had to charge me more now because he was going to rip out some of what I had already done. And so it ended up costing me more money to have my patio done with the pavers than it would have had I just had a professional do it to begin with. So there are moments when doing it DIY is totally appropriate. If you're making less than $100,000 in revenue, if you have no employees, no loans, no assets, maybe you're a really well organized and disciplined individual, you actually enjoy numbers, and you're planning to hand it off to somebody as soon as you grow, but you just know that right now, that's not where I'm at, right? So if that sounds like you, then, rock on, right? Put a plan in place to transition out of DIY by the time you cross that $100,000 line. And, that's not a hard and fast rule, of course, but there is value in understanding the systems, especially like right now when we're talking bookkeeping with like QuickBooks. There's value in understanding QuickBooks, right? Especially if you're going to do QuickBooks online, there's lots of YouTube videos, obviously, right? You can figure out how to do the basics for it. The challenge is if you're not a numbers-minded person and you don't understand the software part of it, it can very quickly become wrong, having double entries and things don't line up. If you're not reconciling what's in QuickBooks versus your checking account, you start to see the numbers be way off and they're never getting closer. When those things start happening, it's just going to cost you more money to have a professional come in and clean it all up and then get going from there, right? And sometimes you feel like, and I know I've had prospects and clients that come to me and they're like, I just want to start over. And they just want to get rid of everything and start from scratch. And that sounds good, but it's not a construction site. It's not a patio where we can just scrap all of the pavers and concrete that I'd already done and start from scratch. These are your financial records in your business that are going to be there while you're in business. And the IRS has 10 years to audit your records. You can't just decide, this isn't working and you scrap it all. Because if the IRS comes back and they say, hey, we want to look at your numbers from 22 and you have no records from 22, you're not going to be in a very good place for an audit. So here's when the savvy move is to bring in help. If you're making more than $100,000 a year and you don't have clean monthly reports, if you don't feel like you can look at a profit and loss statement, your income statement, and with 100% certainty know that it's correct, then you should probably move on, right? It's time to surrender your books to somebody who understands them and knows how to get them correct. If you have W-2 employees or subcontractors, if you've received a letter from the IRS or from the state, or if you want to sell your business someday, if you start making emotional money decisions, that's the time to get out of DIY mode and start to hire somebody. Because hiring a pro is not only they're going to give you clean books, but they're also going to give you that peace of mind. And I've talked about this on past episodes where I've had prospects or clients come in and they haven't done their taxes in a few years. And I go and I get them all situated and I help them out. And the weight has just come off of their shoulders. They feel so much better. They feel like, they're able to move forward now. They're able to sleep better at night. If you're not sleeping well at night because you're worried about your taxes or your financial picture or numbers, whatever it is, that's when it's time. That's when it's time to turn it over to somebody else so that you can sleep better at night, so that you can focus on the other aspects of your business that are going to make you more money. And that's one of the reasons why I said if you have a W-2 employee, or if you've got subcontractors, it's not just simply because it makes it more difficult, but also because if you're hiring out pieces of work now, you understand the value of hiring somebody that you have to pay $20 to $30 an hour to make more money, right? It's the same thing with your bookkeeping and with your taxes. If you are, I have a doctor as a client now who the last couple of years has done TurboTax for his taxes before he hired me. He's making significant amount of money, and yet he's spending an hour of his time or more, I don't know, maybe 2 hours, let's say, doing his taxes. And so there's not only is there the cost of actually sitting there doing it when he could have been more productive or he could have spent that time with his family, but also there's the cost of what if it's wrong? And we did do an audit of his financials and of his taxes, and we did find some errors and some missed deductions that could have saved him more money, way more money than it would have ever cost him to do the taxes. So hiring a pro doesn't mean that you're checking out of your finances. In fact, you're still the CEO, of course, right? So you should know your numbers. You should review your profit and loss statement at least monthly. You should be able to get into QuickBooks, know how to pull that report. Or if you're really doing well, you should have your bookkeeper, accountant, somebody create a dashboard for you where you would be able to see all of your numbers at a glance, know how your sales are doing, know how your marketing is doing, know how your financials are doing. Where's your gross profit percentage? Are you charging the right amount of money still? And of course, you should still be the one that's in charge of making all your financial decisions. So you're not just simply outsourcing work, but you're building a financial system with a team. Now, if you're listening to this and you're saying, yeah, I might be stuck in DIY mode for too long, then that's when it's time to take the next step. And so that's when you can go to meetwithsavvy.com and book a review. Let's book a discovery call and see where it is you're at and really find out, diagnose what's going on in your business and how you might be leaking money, time and energy, and then what we can do about it. So I have a client who now, he's a client now, but when I first started working with him, he had never had a bookkeeper. He'd been in business for 7 years, and he's doing in excess of $500,000 in gross sales. So his profit percentage was somewhere in the neighborhood of, he was gross, or he was netting somewhere in the neighborhood of about $250,000 a year. And he was still doing all of his books and everything himself. And his reasoning was that he enjoyed it. He enjoyed being able to sit down at night and do his books. But very quickly, when he came to me and we started looking at everything, we realized that he didn't really understand how to reconcile his accounts. And so things had not been correct for a while. He hadn't been categorizing things correctly. And he was missing deductions that he could have been taking and recategorizing things. And never mind all the tax strategies, all that kind of stuff. Just simply looking at the books. There were a lot of things that he was putting in the wrong areas because he didn't know better, didn't know the difference. And it ended up costing him a lot of money. Not only one, we had to clean up a couple of years worth of data, but then also just in the loss from being able to, claim those deductions for taxes. And do we amend? Was it worth amending versus just letting it go and going forward? And that was a decision that he ultimately had to make. So how do you know, or how can you plan for getting out of DIY mode? Now, you could do this with your things like bookkeeping and accounting and those kind of stuff, but you could also look at it for anything else. Let's say you are a plumber and you're in the $100,000 to $150,000 range. You've been doing it all yourself. You bill it all out. You've got Jobber or House Call Pro, whatever it is, right? And so that's a lot of your invoicing system and your money and Stripe and all that kind of stuff. And you look at it with QuickBooks and maybe that's correct. Maybe you know how to do that. Maybe your spouse is doing it, whatever. And things are going well, but you are trying to grow and you feel like you're just running around. You can't take a vacation because if you take a vacation, nobody's working and you're not making any money. If this sounds familiar to you, I have a way for you to be able to look at expanding your business in a safe way. And I have a client right now who's in this situation. They're right about exactly there in the 150 to, he'll probably do close to $200,000 this year. He's a smaller plumber, been in business for a couple of years. Him and his wife working in the business, doing the best that they can. And I love them. They're doing a great job. But he wants to grow. He wants to get another guy. And with the plumbing business, if you are in the trades, you know this. If you're not in the trades, maybe you know it, maybe you don't. But you start off, you're not just, you can't just simply open a plumbing business, right? First, you are an apprentice, and then you take your additional tests, and then you can become a journeyman. And once you're a journeyman, you're qualified to work on your own. You can start your own business, that kind of thing. But you can't just, I can't go and open a plumbing business right now unless I hired somebody to do the plumbing work for me, which would be a very smart idea. You don't want me doing your plumbing. So this individual is at that mark where he's like, how do I grow? I'm so busy. I have a hard time taking time off, but I don't see how I can expand further without hiring somebody else and taking advantage of that cost benefit ratio. But his wife is scared to take that next leap. And so one of the things that I recommended to them using Profit First is, and they're on the Profit First system, they're recognizing that they're getting the owner's pay, they've got their profit, they're doing great there. Financially, very sound. But they just don't know how to expand that, how to do more. So what we talked about was creating an expansion account. And essentially what that does, and you can do this for anything, but in their case, what we're doing is to hire labor, to hire somebody else. So for the next 3 months, what we did was we said, let's say a journeyman plumber is going to cost us $5,000 a month. They can be more than that, obviously, if they're really good and they're doing a lot of work. But let's just say $5,000 a month. So for the next 3 months, he set aside $5,000. And what that meant was that even if he brought in no additional income from that journeyman working, he would be able to pay their salary. So not only did he have the comfort in knowing, and she have the comfort in knowing that they could make ends meet and still pay that salary and not bring any additional revenue in. Let's say it got really slow all of a sudden and they're not bringing in as much money. Now, plumbers are not as affected by the weather as a landscaper or a concrete contractor, but there's still slowdown periods. So even in a slowdown period, they could afford to pay that journeyman plumber a full 40-hour wage and not be worried about finances. That's the first thing it did. The second thing it did was it allowed them to have a buffer now. Now they have $15,000 in this expansion account that they can pull from if they need to. Because more than likely, even though that person will be a journeyman plumber, they're still going to have additional expenses, whether it's health insurance, training, whatever it is, right, while that person gets up to speed before they start making the company more money. So using this expansion account, you can do it for whatever it is you want. If you want to do it for marketing, if you want to do it for rent. I know somebody who he used it for his rent, for his new place. He was paying $500 a month. He wanted this new location that was $2,500 a month. And so for the next 3 months, he opened this expansion account specifically to rent, and he would put $2,500 a month in there, and then or $2,000 a month. I think actually is what he did because he was already paying $500, so he knew he could do that part. So he'd put $2,000 a month in there, and after 3 months, he said, "Okay, I know I can do this. I've been doing it for the last 3 months. I'm comfortable with my expenses. My operating expense account is still good. I can manage this process." And so that's what he did. So then he was able to go and get the location that he wanted for $2,500 a month. And he had the money in there, not only for the deposit and the first month's rent, but he also had some extra funds in there just in case. And so that's really the way that you can go from DIY to hiring a professional, moving into a new office, whatever it might be. You give yourself that expansion account. You can have as many accounts as you want. If you've read the book, Profit First, by Mike Michalowicz, on Amazon available for you. I pitch it all the time. I don't make any money by pitching the Profit First book, but I am a certified Profit First professional with them. And the reason I did that is because I found that this book is fantastic and it really helps business owners understand their finances, number one. Number two, it helps them actually make money. Number three, it helps their business be more profitable. You can quite frequently sell your business for much more money than normal by having the Profit First system put into place, because you're able to prove to a business owner or to a prospective business owner, to somebody that wants to buy your business, you're able to prove to them that you have a system in place that makes money. And you can show a true profit percentage. So putting this into place is really helpful. But I became a certified Profit First professional because what I found was business owners failed in two areas. And I've talked about this, I think it was on episode 3 or 4, where we talked about the Profit First system. But they fail in two areas. Number one, they fail in actually getting the system going. They read the book, they're excited about it. They'll go to their bank and they'll open up the 5 basic accounts. You've got your Profit First account, you've got your owner's pay account, you've got your income account where all the money comes into, and then you've got your operating expense account and your tax account. So you have those 5 accounts set aside for all your business that you need to do, right? I think I listed all those correctly. All the money comes into the income, then you put it into profit, owner's pay, taxes, and then your operating expenses. And that's kind of last, and those are all your expenses. So instead of the sales formula that you've probably heard forever, if you've ever taken a sales, or not a sales class, but a economics class or a business class, sales minus expenses equals profit. Well, the Profit First model is the opposite of that. It's sales minus profit equals expenses. So you're gearing your business to make money and you manage your expenses accordingly. But the latter half of the book is all about creating additional accounts for whatever other reasons. You can create an account to pay off debt. You can create an account to buy a building like I did. You can create an account for expansion to hire employees. I used this as I expanded my business and wanted to hire employees. I wanted to know if I could do it. And so I started putting money aside every single month, or every week, honestly. I allocate. If you've read the book, you know what the allocations are on the 10th and the 25th. Well, I do it every week. And I recommend most of my contractors to do it every week because a lot of them pay every week. And so I want that money being distributed to the different accounts every week. Every Tuesday, it's allocation day. Just every Tuesday, boom, you do it. Or you get set up with RelayFi and they do it for you and you don't even have to think about it. A couple of fantastic ways that you can do this if you want. So those are some great ideas of how to go from DIY to hiring a professional or using a professional with your finances, whatever it is, rent, all that kind of stuff. And we didn't even get started in taxes, talking about using TurboTax as a way to, you're using TurboTax or some other tax software, right? And you're DIYing that. I have a lot of customers that come to me and they're like, oh yeah, we normally just TurboTax, but we've got this happening or that happening, and we started this business, whatever it might be. And so now you need a tax professional. And we go back and we look at the past years and we see things that have happened that should never have happened. And sometimes we can fix them still. Sometimes it's too late and you've lost those deductions. You've lost that opportunity to be able to make more money than you would have ever spent on a tax professional. So again, there's times that you can DIY and there's times that you want to hire a professional. So that is it. I hope I see you on a discovery call soon. Again, meetwithsavvy.com. And if you want to know some ways to help yourself with DIYing, and you want to get some information on becoming an S-Corp or hiring your kids, or some other tax strategies like the Augusta rule, or just simply how to read a financial statement, go to SavvyCEOalliance.com, where it's completely free. You can join our school community that we're building up and helping business owners learn how to manage their finances in their business in a better, more profitable way.